All right, good morning, everybody. How's everybody doing this morning? I hope you guys are all doing good. I'm just replying to a couple of your guys' comments on X real quick, and then we will get into it. Um, but I hope your guys' morning's going good so far. I know mine is. I'm just gonna do this real quick, probably just a few minutes, not terribly long, but because I'm gonna try to hit the gym and I got some stuff I got to do today. But if you are joining in, the link is in the chat on YouTube. If you did want to join in to the live stream, you can come on StreamYards and we can have conversations and talk. I'll probably do this for maybe like 30 minutes to an hour or so. So if you want to tune in, stick around, feel free to do so. I'm going to go ahead and reply to you guys real quick. I'm going to slap the S&P up on the screen. There it is right there. So that is up there right now. So it's a decently bloody day in the markets. I do believe at least my positions are, if I'm looking at my stuff. Yeah, it's down, what is that, 3.68% right now. So not great, but I mean, whenever you have a day like you did yesterday, you can expect to see it pull back like that. So yeah, I'm just gonna reply to your guys' comments and stuff real quick on X, and then we will get into it. So I'm probably just gonna put the music back on and mute my mic just for a few minutes so I can reply to this stuff, and then I'll be right back with you guys. All right, y'all. All right, so we're back and we're gonna do this damn thing. So yeah, I just want to start off. If you guys have never been here before, my name is Rensing Trades, or Richie, however you want to say it. A lot of my buddies call me Richie. If you've never been here before, I've been trading since I was like 18 years old, and I've done kind of all of it. I've done day trading, penny stocks, which is kind of like how I started off into this whole stock market, frenzy and trying to, get boatloads of money from the stock market, as most people do. And when I was 18 years old and the penny stock market was kind of, fine, like it was, kind of like the in, and like Zach Morris and all those guys. Zach Morris actually follows me on X. If you're watching, what's up, dude? They were big into the penny stocks and low float stocks and stuff, and kind of like a get rich overnight scheme, and that might work for some people, but it didn't really work for me, and I got my ass handed to me more than once on more than one occasion. So uh, so I basically lost a lot of money, at least what I thought was a lot of money at the time. Maybe it was only a few $100s or so. But yeah, so I decided to move out of that, and I went into from day trading penny stocks, at least trying to. Then I got into day trading options, and I was pretty decent at it actually. I had a strategy down; it worked pretty good. I probably had like maybe like a 70%, 80% win rate, so I was decent at it. But it just takes a lot of time, and life gets in the way. I had lots of times where I couldn't trade because of my life. So I tried to move into something that was more passive, and I moved into dividend investing. And dividend investing is great. No hate to the dividend investing community, but in my opinion, since I'm young, I'm trying to grow my portfolio and beat the market as best as I can. And it's hard to do that when you're investing in, big mega cap stocks with dividends. It's a great way for people to have steady retirement. Like, you pick a stock and you put lots of money into it to collect a dividend. But unfortunately for me, in my opinion, someone that's young, that's like not the way that I think that you should try to rapidly grow your portfolio. So after dividend investing, I moved into what I do now, which is I sell options. I sell options, and I do the wheel strategy on various stocks. Some I do the wheel strategy, and some I just sell options or sell puts to get into stocks that I want to be in for a longer duration. But some I do wheel. And if you don't know what the wheel strategy is, I'm gonna make videos. And by the way, I wanted to mention, I kind of like am revamping this entire YouTube channel that I'm streaming this from. I'm streaming this from YouTube. I'm streaming this from X. So I'm going to be very active on both those things. I'm going to try to make, professional, full-blown videos. This room is actually going to look a little bit different. I'm waiting on some stuff to come in the mail. There's a gigantic neon sign that's really sick that's going to go back there on the back wall. So I'm going to try to make, professional videos for you guys, and just, try to get the word out there, like that. Buying the S&P 500, while it's great, like nothing wrong with buying the S&P 500. But if you are interested in the market and you do day trade or do some of those things and you're losing money, I want to teach people how to not lose money in the market. Because that's like number one, right? Like Warren Buffett says, rule number one, don't lose money. Which sometimes, it's not always possible. But I'm going to try to teach you guys how to limit that. So let's go ahead and take a look at what the overall market's doing. I'm going to go ahead and plop the S&P 500 back up onto the screen here. So right now it's a pretty red day. You can see on the screen here that right there. This was yesterday's candle. That was that massive candle. Right now we're sitting at down 3.63%. Let me go ahead and put this on the 1 hour chart. Or actually, let's do the 4 hours better. 4 hour. So each one of these candles represents 1 hour. So you can see this is pretty much, I'm on the Central Time. So for me, the market opens at 8:30. But for just all intensive purposes for you guys, the market opens at 9:30 Eastern Time. So like New York time. And this is the 4 hour chart here on the S&P 500. You can see up at the top here, it says down 3.6%. I'm also looking at it on my Robinhood. So yeah, it's a pretty bloody day in the market. I'm going to go ahead and plop my Robinhood here up onto the screen as well, so you guys can see that. So here's my what I've got for my Robinhood here, and all of my current open positions. So you can see I have, tons and tons of open positions here on various things. Here are all this, by the way, is set to total return on the side. And it's kind of weird because you can see that it says +% and it's red, and then the -% is green. So, and the reason why that is that way is because I am shorting options. That's exactly what basically, when you sell options, you're shorting options basically. And that is, if you've never heard of shorting before, the name of the game is you're basically trying to sell something high and then rebuy it back down low. It doesn't necessarily work exactly like that with options because they can expire. But yeah, for the most part, I'm shorting options. So these are my current positions. Okay, these are my current open positions here in stocks. These are holdings. I own shares in these companies. You can see that right here in how many shares I have and the total percent I'm either up or down in that stock. Now, this number does not include the number that I have made in option premiums. That is something else that I can pull up here. If I go to my Google Sheets, I can go ahead and pull out my wheelin' and dealin' Google Sheet here. And this is a tracker that I use. This isn't mine. I didn't make this. This is somebody else's. But I can see what my total position is looking like. So I can come in here, like let's say Celsius, right? If we look at my Robinhood Celsius, you can see it says I'm down. What does that say? $400 right there. You can actually go in here and look at for Celsius as of right now. If I was to hard exit Celsius, which means if I was to liquidate that position, I'd actually be up $66.30. Now that's probably because I have covered calls that are in the money right now, which is actually interesting. I wanted to look at that. So I have these 30 covered calls. Celsius is my biggest position, by the way. And Celsius is actually beating the market today. It's actually up 2.2%. Could just be the momentum. I was looking at the chart earlier. But I have $30 covered calls that are deep in the money. So you can see that I'm down as of right now, $1,300 bucks on that position, but it's actually down $8,200. It's because I just rolled these the other day. You can see off this spreadsheet. I closed the $30 covered call for April 4th for a realized loss of 8.1K. And then I rolled to open a new one for a unrealized, the total position value was $6,884.62. So basically I opened another, I rolled for a credit of almost close to $1,000. So that is kind of the spreadsheet. Those are my current open positions there. But as you can look through my total options positions, a lot of what I do is a covered strangle. So basically, I sell puts on stocks that I want to own. I then collect premium off of those stocks, and then I wait and hang out. If the stock does not expire below the strike I selected, the option expires worthless, and I keep the premium. If I sell the option at the strike and the stock goes below that number, then I buy the stock at that strike, but I still collect the premium. So for example, NVIDIA, okay, I just sold not too long ago. Let's see here. History, okay. $42 put assignment. You can see that, right? So basically what I do is I look at the stock and I go to the chart and I say, okay, I'm looking at NVIDIA. Where do I think that NVIDIA's bottomed out? I can probably go to like the 1 week chart. That'd give you a really good, view or perspective of it. Let's zoom out here. Is the chart bottomed out? Maybe so. Yes, no. It's coming up on a 200 EMA. It's not really coming up on it because it had that really good day. It looked like it was going to, but it had that really good candle the other day. But you look at the chart and you go, okay, yeah, I do like the stock here, or I don't like the stock here, so on and so forth. So what I did is I went ahead onto Robinhood. I opened the option chain and I went to NVIDIA L, which is the leveraged ETF for NVIDIA. And I go, all right, here's NVIDIA L. It's leveraged 2 times ETF. I go to sell put, okay? I'm shorting the put. What I did was I was like, you know what? I actually like NVIDIA L at $42. Okay, so what I did is I selected, for me, I always go 1 month out, at least. So I'd go to like May 9th. That would be what I would want to do right now. And then I would select a 0.3 delta. If I was doing this today, I would probably do this one right here, the 32. So you can see that if I sold this, I open this up over here, what I would have to do is I would put up $3,200 and I would collect $277, or about, that's probably about 8% return on collateral. And what do I mean by that? Well, if you're putting up $3,200, and let's say for easy numbers you collected $320, that would be 10%. So this is about a 7 to 8% return on capital, which is really good. I aim to get at least 1% per week. So since I usually do about 30 days, I try to get 4% return on capital per option I sell. I usually don't like picking stocks that do not give me that rate of return, because then I can't properly do my strategy. So I went like that. I said, okay, let's go and let's sell the 42 put. Well, how much should I collect on NVIDIA? Let's see, NVIDIA is right there. I collected $410 for the 42. So basically like 9 something percent was what I collected there. So NVIDIA expired in the money. Okay, it went below 42 on April 4th. So what happened was I was forced to buy NVIDIA. Now you could roll. That's something completely different. I'll make another video on that. But I was forced to buy NVIDIA at 42. At the time I bought NVIDIA, let's see if we go back to NVIDIA on that day, April 4th, what price was NVIDIA at? Okay, April 4th, it closed at 27 and some change, right? So from freaking 42 to 27, right? That's a big difference. Like, that sucks. But hey, the good part about it is like, I wanted to buy NVIDIA at that price, okay? At 42. The great thing is that when I sold that option, which I sold that NVIDIA option on 3/3, okay? What was NVIDIA at on 3/3? That'd be March 3rd. March 3rd, NVIDIA was right. So I sold it at the money, okay? So you can play this a few ways. In this case, I wanted NVIDIA at 42. I was like, I really want NVIDIA at 42. Unfortunately, NVIDIA decided to tank in a way. It's leveraged too, so that doesn't help. But sometimes it helps, sometimes it doesn't. But in this case, NVIDIA absolutely plummeted, and that's okay, because what I'm going to end up doing is right now I don't have the cash for it, but I'm going to do it when NVIDIA has another kind of nasty day. I may have to deposit even cash today. I should have done it earlier. 11%. That would have been good. I'm going to sell another put option to not only collect more premium, but also average down. Okay? In the process of me collecting the $410, I also got assigned the 100 shares, right? So now I have 100 shares of NVIDIA. So I sold a call against NVIDIA to hedge myself, just in case NVIDIA did decide to keep going down, which I did right here. You can see I collected $165 to do that. So now, depending on where this option goes, and we can go ahead and look at that here on my screen. Let's see, NVIDIA 37 call. Okay, so right now it's at an unrealized loss. But if NVIDIA does not go back up to right now it's at 36, 36 and some change. If NVIDIA does not go up to 37 by this contract's expiration, you can see as we go down the line, what happens? It expires worthless. We keep all the money. So then what ends up happening here is this goes from 165 debit to a P&L of 165. So then I'd be up $560 on this position. And then we just keep rinsing and repeating. Sell puts, sell calls, average down, collect premium, so on and so forth, over and over and over again. Okay, this is exactly what I did with Celsius. Okay, I was buying Celsius. You can see the first time I was assigned right here was at $71. Okay, I was assigned shares at $71. I have collected in puts. This is realized, the realized number. I have realized $3,070 in put premium. The call premium is negative because I had to roll this call option here. It was a $5,100 loss, okay, realized, which helps taxes. But next time around, if Celsius expires below 30, I will realize that loss completely back and then some, and then another grand, which is why this strategy is so good. It's very passive. So you can see in a way how, yeah, I'm pushing more buttons than a dividend investor is, but like it's completely not even close to as involved as like day trading. Like I'm not sitting here going drawing lines on Nvidia going, "Oh my god, I got to buy the Friday, I got to look at this and go, okay, I'm going to buy the Friday 95 call and then get out of it the next day." Like it's not as involved as that. So that's why I love this strategy. And I'm like I said earlier, I'm revamping this entire platform. My X, I stay on X. I do the things I stay on X, and I've been very active on there, and I'm going to keep continuing to do that. But as far as the YouTube channel, I really want to make like professional quality YouTube videos for you guys. So with that being said, I'm just going to I'm going to leave you guys. If you want to, you can join this stream. If anybody did want to join, feel free to. The link is right there in the comments. I will post it again so that you guys can, if you do want to, you can join. I'm going to go ahead and put it in there right now. So that is the link to join right there, okay? Bam. That is in the comments right now on YouTube. If you're watching on X, it may or may not pop up. I'm not really sure, but it is there. So if anyone wants to join, feel free to do that. Yeah, I'm pretty sure whenever you guys do join, it should pop one of you guys up on the screen. But we can have up to 6 people join, I do believe. So other than that, guys, while we're thinking about that, I see some comments here. We got Holy Fook. That's funny as hell, dude. That's an awesome name. Do you remember that scandal a long time ago with that pilot off that, there was like an Asiana plane and like it was like Captain Holy Fook or something like that. That was freaking hilarious. But he said he became my 200th subscriber on YouTube. Thanks, bro. It's got to start somewhere, so we're going to try to build this channel, and hopefully it'll actually go somewhere. But yeah, is there anything you guys want to see? I've been doing this a little while. I can read charts for, pretty decent, and, just have a pretty good overall understanding of stuff. But, yeah. He said, at what price am I buying Apple? Well, I'm not really buying Apple, to be honest with you. I could. It'd be pretty safe. Now, what I'd rather do is if they have a leveraged thing like this. Because, like, in the case with Apple, while Apple is great, it just requires a lot of capital to do the strategy I do because of the price of it. But with a leveraged ETF, I can do it for cheaper and probably get more premium out of it. So, like, let's go. Oh, they do monthly options. Yeah, I couldn't do it because I need to have more than this. You see? I can't sell options with that. So I wouldn't be. What price would you think about buying Apple? Well, if I was looking at Apple, let's look. If I was looking at Apple, well, actually, I already had lines drawn out on this chart here. If I was buying Apple, I would have bought it probably. Let's go to the 1 week. You get a lot of stories off that. Yeah, so if I were buying Apple, whenever I would have seen. So let me delete this and this line here. Whenever I would this white line here. So the two things I'm using here is a Bollinger Band. And this white line here is a 200 EMA, okay? If I would have seen Apple, like it did, hit this 200 EMA, which it did, I would have bought right then and there. If I was a long-term investor in Apple, I would have bought it right there at the 200. And probably even maybe slightly below, just because I know that they usually break and bounce back. But you can see it literally freaking hit the 200 EMA and went right to the 200 EMA. It smacked it, went below, and then went right back to the 200 EMA, just because there was probably a lot of downward momentum. So I would have bought it, if it were me, right there. Did you miss out on the move? No, you're just not going to get it as good of a price as I would have gotten it at. I'd probably still buy this, because now you got some upward momentum. I trust the 200 EMA a lot. more than I probably should. But I think that the 200 EMA is a very good, that in combination with the Bollinger Band is a really good way to see kind of where to buy. You can see the green is the bottom of the Bollinger Band. It's pegged at the bottom. Like we're still at the bottom of the Bollinger Band. So if you bought right now and this does happen to rebound, you've got all the way back up to the top of the Bollinger Band. It's currently at 270. So if it were me, I'd be buying Apple yesterday. Let's see if we went to the 1 day. Yeah. The when in doubt, zoom out is so real. Like look at that. Like you look at the daily chart, right? Like we went to the daily. Like so, like look at this is the weekly, right? Every single one of these bars is worth 1 week. Okay. When was the last time it even hit the 200 EMA? 2019 was the last time, and you can see it went bounce right off of it. It comes down towards it, bounce. Comes down towards it, bounce. What's it going to do again? Most likely come down towards it and bounce again. So when in doubt, zoom out. Definitely longer time frames, bigger moves, shorter type frames, smaller moves. That's the way it works. I also look at demand and supply zones as well. This is a major demand zone. You see boom, boom, and then where's this at? Boom. I mean, if it were me and I was a betting man, I'd say that Apple is about to start going up and to the right. But, you know, it could with the way that the markets are nowadays and how volatile everything is, who knows? But if I was a betting man, I'd say it's going to go up and to the right. Yeah, man. No problem. I appreciate you coming in and asking questions for sure, getting active. I got my X up here on the left too. But yeah, dude, this setup is sick. I got freaking Jordan Belfort. I don't know if you guys have seen on my X. There's a picture. I said that I was going live, and I got a picture of Jordan Belfort. Not actually Jordan Belfort, but the Wolf of Wall Street movie. A picture of Leonardo DiCaprio high off the Ludes opening the Lamborghini doors. I think it's either a Diablo or a Countach. I can't remember off the top of my head which one it is. But it's the white Countach, and he's opening it with his foot because he's high on Ludes. That's such a sick picture, and I've got it right above the screen here. Just to remind me of where I'm going to be if the market continues to tank, because I've got a white Corvette. And yeah, that might be me. Hopefully I don't. Hopefully I don't get to that point, but it's a possibility for sure. But yeah, guys, it's whenever you have days like yesterday where you have a freaking literally a historical moment in history where you have one of the biggest days the stock market's ever had. It's you're gonna expect to have a pullback. Okay, you can't expect everything to do what it's been doing. It looks like it's kind of closing a little. No, it's not. It's just zoomed out. It's just because this candle. We're not used to a freaking candle like that. Like, look at that. That's insane. It was one straight huge engulfing bull candle. The whole thing green the whole way. I mean, that's crazy. So of course you're going to need to expect the market to have some sort of sell-off. I mean, it can't just keep going. But it's not easy to find 200 EMA, 200-day moving average is easy to find. Yeah. Yep. Yeah, 200 EMA is definitely... It doesn't. A lot of these big companies don't really hit the 200 EMA a lot. I mean, it takes some time. Like you can see, it hit it there. Kind of went below, hit this trend line that I've been drawing for a long time. Also, look at that. Okay, that's another key point. I drew this trend line. I don't know when I drew it, but check that out. Boom, boom, and where's it at again? Boom. I mean, it's not that hard. But if I was a betting man, I'd say Apple calls should have been bought yesterday or 2 days ago. But what else do I want to talk about in the Robinhood here? My grab, I bought more grab calls. You can see I've got 50 grab calls here. Not a ton, but just a little dabble. I'm trying not to make this position massive. It's 7 grand right now. Not insane, but I'm hoping by 2027 that this will be a $10 to $20 stock. I think it'll be at least 10, and on the high side, I think around 20. That'd be, basically 4x in 2 years. Is it likely? No, maybe not. But is it possible? Hell yeah, it's possible. If this thing catches wind, dude, you never know what could happen with this thing. Like if we go out, let's see here. If we go up to like $20, how much would I be up? And I'm gonna go based off of at expiration, because there's gonna be some theta decay in there. Let's see. Yeah, it'd be like a 10x money. It'd be a 10x trade based off the calls. See that right there? Would be pretty good, man. Would be good. But yeah, I ended up, when Grab had that really bad day, I ended up buying 15 more at $1. Brought my average cost down to $1.70. So that'd be $170 per contract for those that don't know. But yeah, these are leaps to 2027. These are the only open leaps I have. Pretty much everything else is short puts that I'm trying to get into stocks on. So AMC, I'm wheeling. Dutch Bros is more of a long-term position. I'm kind of deep on covered calls right now. That's okay. I'll keep rolling. Carnival, I already wheeled Carnival once. Let's see. That Carnival wheeled wheel 1. I have it divided here. My overall P&L on that was $1,800. Pretty good. I was assigned at 1850, called away at 21. So, yeah, I had 400. I was assigned 400 shares over a period, or I purchased some, but I had 400 shares that were called away. Ended up getting called away at 21. I'm trying to get away from, you can see this here, 230. I was, I don't know what I was doing there, but probably just trying to average down when I saw good prices. But I should have done it in 100 lots. But my account was a lot smaller back then too. You could see that even in the last year, we're up 20%. Okay, my portfolio is up 20%. What's the S&P up over the last year? Probably not that, I bet. 3. Okay, so I'm at what? What was I at? 20? 20. And the S&P's at 3. So what multiple is that? That's pretty damn good. Okay, we're beating the market by a good amount. So, yeah, not bad. Not bad. Soxel, that is another one I was freaking really down in. What is this? At least I only did like 2 of each. I did 4. I have 4 short puts right now on Soxel. You can see total returns down $1,000. But the best part, how will I manage those Soxel puts? I'm just gonna get assigned, dude. Same thing I said earlier. So like, I am going to, let's pull up SOXL here on this chart. I am going to, and let's pull it out to the 1 week. Look at that. Where's the stock at now? Where's the stock at now? Look where it went. Where it went from here to there, and where it went from here to there. 3rd time's a charm. Anyway, Soxel put. What am I going to do? I'm going to get assigned. You can see if I type in Soxel. Well, I got it right there. I have 2 short puts at 1650 and 2 more at 1850. So I'm going to end up getting assigned 400 shares. How much did I collect on that? Let's go to Soxel here. So I received, that's 240 and 240, so that's 480. So I received $480 in premium to sell these puts, and once I get assigned, I'm just going to sell calls against the shares, and then I'm going to sell more puts. So once I'm assigned, I'll sell more puts. And I'll collect more premium, hedge myself, and I'll sell calls. Now I wonder if even right now, would I even be able to sell above at least my break even? Which I still sell below my break even. I'm not saying it. I'm just wondering. Well, today is not going to be a good day to look at it. It'd be a good day to sell puts though. Down 20%. Let's see. Sell call. Could I sell? No, no way. But I could average down for show. And I would if it were me. Oh wait, that was the one day. My bad. I need to go here and then go out to May 9th. I like the 0.3 deltas. Well, there's not a lot of volume on these. There it was. 0.16. Oh, there it is. 0.13 or 1350. Yeah, I'd probably sell this one if it were me today, but I wouldn't really necessarily want to sell a call on a really down day. I'd want to sell a put. That's kind of another rule I have too. Like if I was assigned those shares today, I probably wouldn't. I wouldn't sell the calls today. I'd wait until there was a pump in the market on Soxal specifically. Now, it gets to a point though, like if there was you have to make a decision though, because like nothing in the market's guaranteed. So like, what if Soxal pulled back today, tomorrow, and the day after? Well, that's really gonna suck because then I've had 400 shares I could have sold calls on, but I really kind of try to not sell calls on really red days. On these leveraged ETFs, though, you never know. But I'd probably sell puts. Like, it would be a really good idea to sell this 9 put here. I'd get over a 10% return on collateral right there. I'd get $102 for a $9 put. I'd have to put up $798 for one. So, like, this would be a spot where I'd probably double my position at. I'd probably do 4 of these, hope to get assigned, and then I'd sell 8 calls against my position. Because I think Soxal's fine. It was up 50% the other day. I know, it's crazy. It's crazy. Just the sheer like power of these leveraged ETFs is wild. But does that make sense though? Like how I would do that? Like it's really like as long as you're not like balls deep on your portfolio on like, what you're like if I was like over 25%, in Soxal, it would be not great. But with my strategy that I do, which is not something I made up, by the way. I have methods to it. I've added along to the wheel strategy, but the wheel strategy is a very, it's been around for a while. But the wheel strategy in combination with fundamental and technical analysis can be a freaking killer, and you can tell by my portfolio value. Like there's a reason why I'm up 20% over the last year, and the S&P's at only 3. Okay, so I'm not saying I'm the best out there, but saying that for someone that's pretty much like hands off my portfolio for the most part, I sell puts and sell calls here and there, but it's doing pretty damn good, pretty damn good. But yeah, this HIMS put credit spread, that was real good. I sold that a long time ago. The problem with Robinhood though and these credit spreads is like whenever the spread has like this shit, like look at this. There's no volume on the 12 put, so it's got $1, right? It's set at $1. But the 15 put has volume and it has the bid in and the ask in, and it's at 84. So of course, what does this thing show? That it's up 8,400% today. Okay, it's not, because that's the mark. That's the middle point is what they're putting up there. Like this freaking thing goes all over the damn place. Really, this should probably be at like 0.3. And this gain right here should probably be close to like 3,000 or something like that. What's my all-time? My all-time as of right now, so I started doing this strategy in May. So I started doing this strategy right about here. This and back, this is all flat. You can see I wasn't doing shit with this portfolio here. I was using Webull, so I don't know what my actual all-time up number is, But based off what the Robinhood's saying, this from here, all this dip right here up until right about there was all dividend investing. And then I was like, you know what, this is slow. And then I did lots of research, and that's when I switched to what I do now. So now the all-time is at 23%. So basically, I've been doing the wheel strategy for a little less than a year. So this would be more accurate for this strategy specifically. And it's up 19%. Would you do 0 DT credit spreads on SPY? I actually looked at doing it yesterday, and I should have. I was going to do call credit spreads on SPY. Because I posted on my X, I said short SPY, and everybody was like, well, you know, what's your trade? And I was looking at either buying puts or call credit spread. And I'd probably rather do call credit spread personally. But yeah, I was going to do it yesterday. I just didn't have the funds for it to do it. But yeah, I would have totally done it. Because I've kind of got all my shit tied up. Like, I deposited money yesterday because I was going to do it. But then, like, life got in the way. And I was eating lunch. I was hanging out with my girlfriend. I was doing shit. So then I was like, you know what? Whatever. Screw it. And just letting it kind of ride, you know? So, yeah. Soxel, Rivian. I love Rivian here at these levels. Love it. TSLL. Love it. Celsius. Love it. You guys know I like Celsius. I've been in it for a long, long time. I was buying up in the 70s. I liked it there, and I really like it here. So I'm going to keep buying more. Dutch Bros. Love Dutch Bros. Kava. I had Kava too. How much should I end up making on that Kava deal? $5,000. Not bad. Not bad. But I was buying Kava and Dutch Bros and other portfolios way before this. This says I was assigned at, 88? I was buying Kava post-IPO in, like, the 30s. Okay, that was in a different portfolio. That wasn't attached to this spreadsheet. Carnival. Like Carnival. I like Carnival now. You outperform the market by like 20%. That's really good. Yeah. I mean, it's pretty decent. Yeah, I mean, it's pretty decent. The thing about this strategy is like, whether the market goes up, down, or sideways, you make money. That's like what I love about it, and like why it's very passive. You know, because it allows you to make money even when the market doesn't necessarily do what it's supposed to do or what you thought it was going to do. Like, if the market goes up, guess what? You make money because it's getting away from your short puts. And it's also, if you have shares that you're selling calls against, you're increasing your, you're riding with the shares and the short call premium. Plus, if you're doing a covered strangle, like what I do, or you have puts, calls, and the shares, like, you're making money in either direction. So it's very, mentally, it's you don't have, shit to worry about, really. Buy short-term options, best strategy. Hey, dude, for some people it works. I don't have the ability. I don't have the ability to sit and watch the market all day. Like, what I would have done is I probably would have bought this Friday's expiration put. Is probably what I would have done for the S&P if I was day trading. But I don't do that anymore. I stick to what I know. And what I know right now is that I'm beating the market by a lot, and I don't want to change it, because if I have one day where I deviate from my rules and I end up blowing my account, I will never forgive myself, because I've done that shit too many times. Like, when I was younger, when I was 18, 19, and I was like going balls deep in freaking, some penny stock, I was like, no. Losing my shit, and I can't do that anymore. Day trading is for degenerates. Yeah, I mean, day trading, if it works for you, then it works for you. Like, if I could sit at my computer all day and monitor the market, then I might do some of it. But I had no idea about this strategy back then. I didn't know that you could short options. Like, all I knew was going long, and that's all I knew. But now that I do know, now that I do know, it's changed my life. And I hope that with this YouTube channel and with other people's, with my channel, TJ's, some other guys, and my ex. Hopefully, we can change some people's lives because it really has changed my life. And I have a really good job outside of this. I don't necessarily want to say what my job is. A lot of people on X already know what I do, but it's a really good job. I make pretty damn good money for my age, and I'm hoping that I can get to a point where I'm like upper 30s, and then I can kind of like almost maybe not even do that job anymore because I'm making so much passive income. I say passive, it's not necessarily passive. A lot of people, big buzzword in X about selling options is not passive. I think it is in a way. But yeah, I'm hoping that maybe I can not do that job for, until I would be forced to retire. So, yeah, I don't know. That's kind of my thoughts on it because I can see like how some of these guys, make lots of money and they just push a couple buttons and they hang out all day. Better than collecting dividends? I mean, I think so. For someone that's young, I mean, honestly, I would do this even if I like the great thing is like a lot of people say wheeling is a 3 income strategy, and I disagree. I think in a lot of cases it's a 4 income strategy because you have the premium from the put, the premium from share price appreciation, the premium from the calls. Not only do you have all 3 of those, but then if the shares give you a dividend in the process, you're collecting a 4th income stream, which is also decreasing your adjusted cost basis. So, yeah, I mean, if you are, older and you want to stick to dividend stocks, there's nothing saying that you can't go and sell calls against your dividend, like right now, like in this untimely market where people think that, hey, maybe the market is transitioning into a bearish state. There is absolutely nothing out there that says you cannot sell calls against your Coca-Cola shares because you're retired. I don't see why you couldn't, sell calls against your shares, collect more premium and the dividends. Like, hey, I don't know how many shares, if you are retired and you got Coca-Cola stock, but that could mean that you could buy a freaking, balcony suite on a Royal Caribbean cruise for a week or so. If you sell calls against those shares, I mean, that could be like 10 grand plus for some people, depending on how many shares you have. So it's not little money. It's big money, guys. It can be very, very big money, depending on how much money you have. Yeah, you can make money in any market selling options. Tim is absolutely right. Now, outpacing the market, there's different strategies and different ways you can cut it, but yeah, you will always, by selling options, you are guaranteeing yourself money flowing in. That being said, that doesn't mean dump every single dollar you have into a portfolio and sell options against that money, okay? Because a lot of people don't have several $1,000s to just be, locked up in selling puts and calls, okay? You just don't. And that's not what I'm saying to do. This is like your money that you have in your portfolio that, hey, yeah, you have to be willing to lose it. Because if you have that mindset where it's just like you don't even think about it and it's just, you'd burn the money in a way, then it's like if the market goes down like 4% or whatever, like let's look at my portfolio right now. What is my portfolio? It's down over 5.5 grand right now. Okay. That is a lot of money for a lot of people. All right, 5.5 grand. If someone said I lit right now $5.8 thousand on fire, some people would pass out. Like I bet, because like that's not a little amount of money to a lot of people. But guess what? I don't give a fuck. Like it's down, whatever. Like I really do not care because I know that I've got covered calls. I know that I've got cash secured puts. I'm collecting premium, and it's all faded decaying away. And the market goes down, the market goes up, the market goes sideways. Either way, I'm making money. Yeah, I don't give a fuck. I do not at all care. But like right now, 7.2%, $5.8 thousand. Do you see me sweating over here? Do you use margin for cash secured puts? That is a good question. Aditya, I believe, is that how you say it? Aditya? That is a great question. Have I ever used margin for cash secured puts? And do I use margin for cash secured puts? Well, the answer to that is yeah, I do. But something that interesting that not a lot of people know about is that the margin does not get used unless you're assigned the option. So like, let's say in my case, I have, we can click on it right now. You can see right here, I have $4,015 in cash. Okay, that is my cash amount. My collateral in options is 42 grand. Okay, so if everything that I had for puts right now, if these are all the money in short puts or cash secured puts, that if I was to get assigned, that's how much money it would use. Okay, so if this happened, that would be 41,900. Let's see, 41,900 minus 4,015. Okay, that would be that number right there. Okay, $37,885 would be in margin. So, that being said, when you short a put, you're not using the margin. Okay, it is using the margin as collateral, but you do not get charged interest on that margin. Okay, so that's something I just want to put out there. You do not get charged interest, at least in my brokerage, for using margin as option collateral. Now, if you get assigned, then you do use margin. You do get charged interest on that margin. But like, let's say in that case, like right here, where I have 42K in option collateral, and like the whole market, everything I'm in, like goes major red. You know, like everything that I have, every put I have is in the money. Which right now it could be. I don't know. I haven't even looked. It could be. Every single short put I have could be in the money. But like, let's say I don't want to get assigned on this stuff. What I could do is as that date gets closer, I could roll that option, that short put out. And once I roll that short put out, it kind of relieves me of not getting assigned at that time. And then you could just keep doing that over and over and over again. And hopefully the stock that you are, or ETF that you're selling the put on, will be out of the money, and then it will expire worthless. So does it affect your margin? Does it affect the margin buffer? Well, what happens is with Robinhood, so I'm not so like Robinhood is different than other brokerages. So like Robinhood, the way that the margin they allow you to use is very interesting. So it's like right now, if I was to get assigned on like this Carnival put and it pulled money out, I honestly don't really know how Robinhood's works, to be 100% honest with you. I'd have to look in their thing. But like if I got assigned this Carnival put right here, it would pull that cash out. It would relieve the option collateral, but then it would give me more margin available to be able to sell puts against other things. So as you're like, the further and further amount of cash that gets taken out of your account to be used for like short puts decreases, then the margin buffer gets tighter and tighter. So if you have like, you know, no puts right now, or if you have you know, like this cash value, at least in Robinhood, the more cash value that's in there, it increases the margin buffer. But as you get assigned and it takes away the cash, it will take away the option collateral as well, because like one of the short puts has been, you know, used. So like in this case, $22,100 would be taken out of that. And then that would change the margin buffer, and then they would give me more buying power to short more puts. And if I did, then it would then decrease the margin buffer back down to probably like 5.5%. But now other brokerages, yeah, so yeah, it's definitely, yeah, I think it's because Robinhood lets you use half the available margin for cash secured puts, but after assigned, it gives you the other half back. Yeah, it's very weird. Like other brokerages like Schwab and TD and like all those guys, like they don't, they just give you like the full amount. They say this is how much margin you can use, point blank, period, based off of XYZ. And then that's how they do it. But Robinhood's very weird. But that little thing, I am willing to put up with that bullshit and not knowing really how much margin I can use to be able to have this interface. Because I like this interface a lot. Like, it's very easy. It's very, very, very easy. I don't think there's any brokerage that's as easy to read and understand. Like, I could teach this to a 2-year-old. Maybe not 2, 4. 4-year-old. How to sell puts and calls in Robinhood. But yeah. Yeah, guys. Well, anyway, I gotta run because I gotta go to the gym. What is it, 10 o'clock now? Yeah, so I gotta run and go to the gym. But I really appreciate you guys being here and following me along for as long as, it's been. I'm glad that I finally have a real setup now where I can, actually produce some real videos for you guys. So hopefully you're excited for that. Maybe I can teach you some things, and I'll probably learn some things along the way too. So anyway, I hope you guys have a good rest of your day. I'll keep a lookout on the market, and I will see you guys on X throughout the rest of the day. Adios, amigos.